Hey guys, welcome back to the Value Investor Show. Today I want to talk about one of my favorite stocks, one that I have covered thoroughly on this channel for the past 3 to 4 months, and that's none other than United Health Group. UNH has had a few turbulent weeks, but is now back on the grind, back in the green. Here's everything you need to know about the United Health. So for today, I want to cover this stock, the latest news, the fundamentals, my thoughts, what happens next, and most importantly, the catalysts for this company. What needs to go right in order to see the stock back above $400. But before I do, I want to flash on Running, a company that I have talked about for weeks now. I've posted about it when the company was trading at $35 a share. I said this was a huge opportunity. I was buying, I was posting about it, and yesterday the company delivered. Running reported insane Q3 results, double beating estimates, growing 38% year on year in revenue on a constant currency basis, and raising guidance. This is a multi-billion-dollar opportunity. Despite tariffs, margins improved for this company and the stock was up at least 18% on the news yesterday. It's another example of a company that I have talked about as undervalued, which then completely changed trajectory after a catalyst. It's not the first time this happens. I've covered United Health extensively back in July and August. I also covered LVMH in August and September. Generally, the companies that I have been buying have been performing extremely well. And I believe the next company to do this in my portfolio will be Deckers Corporation. I truly think that Deck will rebound, and I do think that it will rebound much sooner than many people expect. Now back to United Health, there was a massive drop that has been seen on the back of the government shutdown as the President Trump called for changes in ACA payments. There has been a lot of turmoil last month. The company traded as low as $320 and has since rebounded back to $340. But moving forward, I see a massive opportunity here because within the next few days, Berkshire Hathaway reports their 13F filings. Could Warren Buffett have added more United Health during the July-August drop? If yes, I think we could see huge upward pressure on the stock. If not, if Buffett actually reduced or sold his position, then that would obviously be negative news. But I think that's very unlikely. It's not Buffett's style to buy and sell a stock within a few months. The most likely scenario is that Buffett either held or added to his United Healthcare position. Now, when did he actually buy, and what might the 13F filing show? Let's walk back. In the second quarter filing, Berkshire reported owning United Health Group stock between March 31st and June 30th. That means that Warren Buffett bought before the massive drop in August. And if Berkshire added more in Q3, that means he likely did so between July 1st and October 1st, and more likely during the August sell-off. If that's the case, this would be massive news and a massive opportunity, but we'll only know in a few hours within the next 1 or 2 days. In the meantime, a lot of hedge funds have been doubling down on their United Health bets in Q3. Bessemer Group added 1 million shares of United Health, increasing their position by 152%. Yachtman Asset Management added 45,000 shares, while selling most of its positions right here. Alpha Cubed Investments also added 89,000 shares of United Health, increasing their position by 250%. So not only hedge funds are buying, they're doubling down, they're tripling down on their existing investments, and that's very encouraging to see. And apart from those three, many more have been buying United Health. Smart money is back into this name. Other notable buys this quarter include Adobe, Fiserv, Constellation Brands, UPS, and many others. But United Health is again on top of the list this quarter, just like the last quarter. Now, United Health recently reported their Q3 earnings, and after posting, the stock saw a big uptick to around $380, but basically all those gains were erased after market open. This doesn't matter though, because for me, when I bought this company, my thesis was to hold it for at least 5 years. There are problems that need to be solved, but I believe in the leadership. I do think that the true recovery for United Health in terms of fundamentals starts from 2027 onwards, and by 2030 I believe this will be a completely different beast. In the meantime, I'm happy to collect the 3% dividend, and in terms of results, the company reported an insane revenue growth of 12% year on year. Earnings from operation had a very low margin of 2.1%, which was expected given all the cost pressures. The medical care ratio was in line, still quite high, but as the CEO said, they are strengthening their position and re-accelerating to show solid growth execution from 2026 and beyond. While the company remains a beast, growing revenues across premiums, products, services, and investments, there are still many problems to address, but their leadership is grounded, they're optimistic, but at the same time they're cautious and they're fully transparent about it. They want to solve these challenges and they want to create the best version of United Health we have ever seen. Another staggering chart is the dividends. United Health has been increasing dividends every single year for the past decade. Look at this chart. Year after year, quarter after quarter, dividends keep rising. I believe United Health will continue this trend. The group recently authorized another quarterly dividend, and with billions in cash, there is no reason for the company to stop issuing dividends. Now, what's actually going wrong and what needs to go right? The first one is that from the start of the year, there were leadership changes. Andrew Whitty, the previous CEO, resigned due to personal reasons as the company missed earnings for the first time since 2008. This caused panic, and when the new CEO, Stephen Hemsley, came in, he completely removed all financial guidance for the rest of the year, which spooked investors. But that move also allowed leadership to start fresh with a clean slate and rebuild from there. Another issue was the DOJ investigation and lawsuits that are creating overall market scrutiny. As the bigger insurer in the US, United Health naturally gets the most attention and most of the heat. Rising costs over the last year have also pressured margins. They're repricing to address this, but the V28 implementation, Medicare Advantage cuts, and Optum Health member selections have all added to this burden. So what needs to go right? So the new CEO who led United Health from 2006 to 2017, Stephen Hemsley, is an operational excellence. He's an operational mastermind. He knows how the business works and he has a track record. He has been very vocal about settling the lawsuits, cleaning up the company's image, and engaging directly with regulators and the DOJ to put these issues behind them. As for the rising costs, the company has said before that they will need 2 to 3 years to narrow the gap between the V24 and V28 and return to strong earnings and margin growth. We're now closer to the bottom than to the top. I think Q4 will probably be the last quarter that we'll actually see really bad margins and earnings from the company, but from 2026 onwards, growth in terms of earnings will re-accelerating. Now, in terms of my overall general thoughts on United Health and the market, in my view, most cost pressures and setbacks have already been priced in terms of the stock price. Analysts are expecting the worst, but the new CEO, the operational mastermind who will turn this around, and I truly believe in the new leadership. The healthcare industry is growing. Aging populations means more demand for insurance, and that's not slowing down. It's expected to grow at 6.6 CAGR growth through to 2030. But one of the biggest catalysts for United Health is value-based care, which United Health is doubling down on. And I believe United Health is the only company in the space perfectly positioned to rebound because of its diversified model, because of their ability to control across the entire healthcare value chain, from their technology they have, Optum Health, to hospitals they have, to insurance, and everything in between. United Health is very well positioned to rebound back once the pricing issues are resolved. Thank you so much for watching, and I'll see you guys in the next one.